Aloha, and welcome to Alice Insurance's Risky Business. My name is Sean Satterfield. I'm the Business Development Director.
Shane Choi, Account Executive with Atlas Insurance.
And today our guest is Max Kopper.
Hey, Sean. Yes, I'm Max Kopper. I'm a partner at Porter Kiakona Kopper, a condo law firm where we represent condo associations in everything under the sun, including things involving insurance.
Awesome. Tell us a little bit about what's important about D&O insurance, because that's what we're going to be talking about today.
Well, the basic, Sean, is under the Hawaiʻi condo statute, condominiums are required to have D&O insurance for their boards. Mm-hmm. Not only that, often in the what we call the condominium documents, that's your bylaws or your declaration. That's the Bible for the association. And those documents also often also contain a requirement for insurance and a requirement that the association will indemnify the board of directors. Mm-hmm. So even if they don't have an insurance policy, they still have to defend the board of directors. So it's very important for them to get a solid policy that covers their obligations.
Yeah. And also, when we meet with boards, the D&O insurance, there's always a question about like the coverages of them, and what are some things that board members need to know. Right. So maybe give us some examples that you have about what's the importance about the coverages, maybe breach of fiduciary, those types of things.
Yeah, well, the long-winded answer is. In the American jurisprudence system, there's no barrier to entry. In other words, anyone can sue on anything, whether you have a claim or not. And so what often people do, especially when you have an angry or upset owner, is they'll sue the board and they'll name everybody under the sun. Mm. They'll name all of the boards of directors individually. And so it is extremely important that you have a good policy with broad coverage so that those individuals are covered, because board members are just volunteers, right?
Right.
And so that's often the first question we ask when someone, or is asked of us when someone is contemplating running for the board. You say, well, am I going to be protected if I get sued? Because they're not getting paid. And so there are so many different scenarios we've seen that where you see lawsuits for the most outrageous things, but it doesn't stop people from filing that lawsuit and incurring that expense on behalf of the association.
Yeah, one of the things that we do, I know personally, is that we try to educate as much as possible. And I think a lot of times there's some shortage of information out there.
Right.
Shane, maybe tell us a little bit about your ideas about, how a board should look at D&O insurance and then the coverages.
Right. So directors and officers insurance for the Ds and Os. Mm-hmm. From insurance standpoint, we mainly look at what's the biggest thing is what's the coverage limit. Mm-hmm. And the point of that is defense coverage, right? Tell us a little bit about what's the importance of the defense coverage, and is there anything specific in the policies that they should look out for? Maybe defense included versus outside. I know you're familiar with the ins and outs of D&O insurance, but just from your perspective, tell us a little bit about it.
Yes. So from, obviously from the lawyer standpoint, the defense and indemnity side is probably the most important side of the D&O. Because that cost can skyrocket exponentially. And so there's a couple of things we look for. First, I know the insurance industry doesn't use this term anymore, but is the policy cannibalizing, right? Mm-hmm. And so when you're looking at that limit, it may seem like a big limit, but if it's a cannibalizing policy, mm-hmm. the insurance, the cost of litigation will eat into that very quickly. And then we also, obviously, the total limit, the total amount of coverage, we recommend a long discussion on that. And then something that hasn't come up a lot, but is really interesting is we've had some policies not include a duty to defend, but instead they have a duty to reimburse for the cost of defense. That gets a little technical, but what that does is Hawaii law has a really strong case law on interpreting the duty to defend. If a policy has a duty to defend, the courts take that very seriously. And so they impose coverage, or they find coverage in even sort of the most murky situations in a duty to defend. That's not yet true in a duty to indemnify. So some insurance companies may be trying to get around that broad interpretation by using this duty to reimburse rather than duty to defend. So we strongly, again, I've only seen that once or twice. It's not something everybody should be concerned about, but it's always good practice to make sure you have a clear duty to defend in your policy, because Hawaii law will protect association boards pretty good if they have that standard language in there.
Right. Just put it into practical terms. So duty to defend means, is it the insurer's duty to defend? And practically, I guess from a practical standpoint, what does it mean for the policyholder, in this case, the association, whether they have that or not? So what's maybe the benefits versus the downsides?
That's a really good question, because what we're talking about super technical. So the duty to defend is, yes, it's on the insurer. And that's how I call the other type of policy a duty to reimburse, but it wouldn't be written like that. It would put the duty to defend on the actual insured, on the board. They have the duty to secure their own counsel, and then they can seek reimbursement for that. And that might sound good to a layperson, right? I get to choose who my attorney is. But what that does is it flips the script in terms of who has the duty, and it doesn't impose that safeguard. So it's much easier for the insurer to deny that what I call that reimbursement. So even though duty to defend is on the insurer, and the insurer has both the obligation and, in some senses, the right to pick counsel, frankly, all insurance defense counsel in Hawaii Bar are good attorneys. So even though you might want to pick and choose the one you're used to, you're going to get a top class attorney that the insurer picks. And it might be different than me, the general counsel for the association, but sometimes that's a good thing. You have a different perspective, and it also sort of separates the issues. So it's a win-win or it's a huge win for the board when they are able to tender coverage. They, coverage is triggered and they get someone appointed. That's what you have insurance for.
Yeah. Tendering coverage is actually a good standing off point that we can talk about a little bit. So let's say coverage needs to be tendered. What's the sources of where that claim or that incident comes from? A lot of times, what are maybe the common things that you see?
Yeah, so that's again a great question. What we see, our most common thing is you get a demand letter, and our practice and what we advise boards to do is, even if it's something remotely close to a claim, we tell them to call you and send the email to you to have you tender it. And even though we know it likely won't trigger coverage, it may be good for coverage in the future. And so, it's often for insurance, for associations, it's usually owner claims. So it's going to be an owner claiming the board breached its fiduciary duty by not holding the annual meeting on time, by, charging them too much in maintenance fees, all those sorts of things. And so sometimes the problem we see there is sometimes boards don't take it as a demand, but it actually is a demand, and so they should be tendering it right away. Although, frankly, by the time it does get to an attorney and is tendered, I've never seen an insurer push back saying, "Oh, you didn't tender it on time."
So it's pretty important to tender it as soon as possible, as soon as they think that it'll be a claim, or even if they don't think personally it'll be a claim. What are some metrics that you would say kind of qualify it as a claim, an actual claim?
Yeah, so I think it depends how you use that term claim, and I think insurance companies have a firm idea of what a claim is. And so, for them, a claim is often an actual action. So either arbitration or or litigation claim. Sometimes mediation is kind of the gray area, depending on the policy, depending on the insurer. Sometimes a demand for mediation is not considered an action, and so is not covered. Those three, when you have an actual, what I call demand for mediation or demand for arbitration, which can be as simple as an email saying, we hereby demand mediation, we consider that a claim. So that's the most common thing. But again, even if you have an owner saying, if this doesn't happen, I'm going to sue you guys. Right. To me, that's a claim, because it's at least a conditional claim. And so that's something we recommend tendering right away, because if there is ever a question on coverage, at least you have that clear point where the insurer was notified of the potential claim.
Right. And it sounds like it's better to err on the side of caution in a lot of cases for some of these potential claims.
Absolutely. That's our standpoint. And again, I haven't seen it go bad too many times, but why risk it? It's super easy to just send it to you and make you send an email on.
That's actually a good point that you bring up, because as an insurance agent, we handle different types of coverage, and that includes the general liability.
Right.
A lot of times, do you see the general liability and the D&O, do they cross over?
They do a lot. And I think from a client standpoint, they don't know or care, right? And so oftentimes we will usually instruct the client, or if we're talking directly to the agent, say, unless there's any issue, tender to both. That's the safest way. In fact, a little anecdote. I have a situation on Maui, two totally separate associations. It does involve the fire, almost identical claims, and both in both buildings they submitted to both carriers, the D&O and the GL. In one building, the D&O picked it up, the GL denied. In the other building, the exact opposite happened. Mm-hmm. So you just never know. Right. And it's important to cast a wide net.
Trying to get it covered as broadly as possible. And then that's what you mean by the widest net.
Yes.
Catching the fish is
exactly
the claim coverage.
Yeah.
Well, since we're talking about claims and coverages, what doesn't it cover? What are some of the common mistakes that people think that it may cover?
Exclusions.
Exclusions, exactly.
Yeah, what's the biggest exclusion I see actually is the insured to insured exclusion. So if a board member is suing another board member, or a board member in the minority faction is suing the board in the majority faction, that will often not be covered. Although I have seen it covered in some instances, but oftentimes, I think I've only seen it covered once. And so every other time it's not covered. And that's unfortunately a common thing in associations is you see board members, suing each other or filing a mediation demand at least against each other. And so that's a really, really big exclusion. Intentional acts, of course, that's a big one. And so, that's one where sometimes you want to call up the plaintiff's attorney and say, hey, can you change your demand a little to trigger coverage? Of course, we can't do that. But sometimes a plaintiff's attorney just wants to put the most egregious, statement out there. And they say, you stole money from us. Well, that's not going to be covered. But if they say, hey, you breached your fiduciary duty in doing this, or negligence, that's often, that more likely would be covered. So those are the two that pop into my head: intentional acts and insured, uninsured crime. So
Sean usually brings up one that comes up quite often too: failure to maintain insurance. I think it's something that's kind of been coming more to the forefront in recent years.
Yeah, one of the things that we've seen, and I guess it's still kind of being debated, is failing to cover hurricane insurance, full hurricane insurance.
Right.
And that can be an issue with the D&O, possibly. What are your thoughts on that?
Oh, the hurricane insurance question was a huge one about a couple of years ago, and it continues to this day. And that is a claim that we are kind of waiting to hit the fan, although we've seen some similar things. And what we're talking about is a 514B, the Hawaii condo statute, requires that associations insure their building for the full replacement value. Mm-hmm. There was a question whether that includes hurricane insurance. Now virtually every condo attorney in the state says it does. Even if it doesn't by statute, mm-hmm. condo boards still have a fiduciary duty to protect the association. And so would getting less than full coverage satisfy that fiduciary duty? Likely no, especially in the lending climate we're in today, where your homeowners are likely not going to be able to get loans unless they have full coverage. Back in the day, really before COVID era, the lenders weren't asking about hurricane coverage, but now it's on their radar. So they're asking every time, and it's getting much, much harder for associations and owners in associations to secure loans, especially if you mess with the insurance. In terms of claims on insurance, what we are seeing on Maui is now more so. I start off having two lawsuits about being underinsured mm-hmm. For the full replacement value of the building. Now I'm up to six lawsuits, and I'm not the biggest condo law attorney in Maui. There's others, so I imagine we're probably well over a dozen mm-hmm. Of these types of lawsuits on Maui for. To explain a little further, what happens is the building, you have a total loss in the building. And now that they're finally at the rebuilding stage, the owners are like, wait, why isn't this fully covered? Because mm-hmm. the statute required us to have insurance for the full replacement cost. And so they find out it's underinsured, and now they sue the board or sue in some instances sue the insurance agent. One instance trying to go after the insurer themselves or the property management company. Mm-hmm. So it's really important to err on the side of broader and higher coverage. So not just broad in terms of exclusions and what it covers, but the dollar value when you're talking about the property insurance.
Yeah. And I think what's important about that too is really on the insurance side, you want to make sure, like you said, make sure that you have complete coverage or more broader coverage, but also understand what the values are, right? Yeah. Because one of the things that happened in Lahaina, for example, was you had demand surge.
Yeah.
So there's a huge amount of demand for materials and labor and all those things. And so those become shortage, the prices go skyrocketing, and that becomes another issue.
Yeah, the good thing is the law only requires full replacement cost at the time mm-hmm. the coverage is made. Mm-hmm. But that's good news for us. That's right. Not good news for the homeowners, yeah. right, who are having to rebuild. And so it may stop these lawsuits, but it doesn't put money into their pockets when they need to rebuild. And, Lahaina has taught us many things, but the, total loss was always sort of this pie in the sky thing mm-hmm. that will never happen, but it's such a reality now. Yeah. And we'll probably, unfortunately, continue to see it. So taking that total loss number seriously, I mm-hmm. think is one of the many lessons we can take out of Lahaina.
Yeah. So looking back and at some of the things that you've learned throughout your career, what are some of the best practices that board members should do to kind of maintain good D&O, or just things from a board member standpoint? Because you work with them,
yeah,
and all the rules that they have to follow, and maybe, their condo docs, et cetera. So what are some of the practical things that you can say?
Yeah, I would say the number one thing is to make sure you know what your deductible is and why. Mm-hmm. I have an association that's had a lot of litigation, so their D&O deductible is $200,000. Most of the D&O claims are pretty small claims. Mm-hmm. And so you're essentially self-insured at that point, sure. right? And so so I don't know how much that association has pushed to say, hey, how much more would it be for a $50,000 deductible or a more reasonable one? They just kind of accept what's being told to them also because they want to keep their payments the same. And so, look at the deductible and make sure that makes sense for you. And number two is question the exclusions. I think talk to your agent and talk about what's excluded and what's not. It's easy for board members to look at the dollar value and say, do we have enough monetary coverage, total coverage? But nobody looks at the breadth of coverage. And I think that's a misstep, and because it is complicated, right? But it is something that you should at least have the conversation about. Like, how much more really would it be to get rid of some of these more common exclusions, or at least soften them a little?
That's a good point. I know you mentioned the policy cannibalizing itself, and Sean and I kind of experience just with the policyholder itself. I think there's defense outside of the limit and defense inside the limit. Is that?
Yeah. So it's, does the defense cost go towards the limit, right? That's what we refer to as cannibalizing in law. So in other words, if you have $1 million limit and you have $200,000 in defense cost, is what's remaining for settlement, or coverage of a claim or coverage of a judgment, is it 800,000 or is it the full million? So that's a really big difference in policy, especially in $1 million policy, which sounds like a lot. I didn't grow up with much money. $1 million policy sounds like all you need. But in a lawsuit, especially one that goes to circuit court, let's say it's one that's maybe a defect one, or something that involves building damage, the cost of repair is going to be extremely expensive. And you're going to need extra. So the cost of litigation is probably going to be north of $300,000. So that means you might have this $1 million claim, or an owner claiming over $1 million. And, now you only have about $400,000 to play with in settlement. You're not going to settle that case. And then you go to trial, and what if you get a judgment against you and the full judgment isn't covered? So
higher coverage is a lot of times better situations.
Yeah.
And do you also see the umbrella? Is there umbrella coverage in addition to the D&O that kind of sits over that?
Well, that's a really good point. The umbrella coverage is extremely important. I think umbrella coverage is often forgotten until you get into situations like the one I described, and then you say, thank gosh we have it, right? And so that's another thing I think they need to have a conversation with you guys is, hey, what's our fail-safe here? Especially the smaller buildings, because what will happen is if they can't cover it, it gets specially assessed to everybody, and they have to pay it. And if you have 70 owners, and you have a $1.5 million special assessment, that's going to kill them. If you've got 500 owners, it's a little easier. It's still going to hurt, but it's less of a catastrophic event. So these smaller buildings are the ones that I think would really benefit from maybe paying a little bit more than they want to now, but it keeps things safer in the long run.
Is there something as far as the D&O coverage itself? Sometimes policyholders associations might want to change insurers. So go from one insurer, maybe jump to another insurer that maybe has a better premium. Is there something they should be careful of, or that you've seen has been a problem as far as changing from one to another and then there not possibly being coverage that applies?
Yeah, absolutely. That is, again, the insurance industry, you guys know better than anybody. It's not, the boards are so used to dealing with contractors. Bring us 3 bids on a, landscaping contractor. They all know how to cut grass. They all know how to trim trees. We'll pick the best one. It's not like that with insurance, right? It's not apples to apples. So when you are switching policies, that is often the point I talked about earlier about looking at breadth of coverage. That's really the point when that happens. When you switch policies, is you think you're getting the same thing, but that's when you guys are doing work overtime, comparing the policies and informing the board. But they need to be the ones asking questions about well, hey, do we still have this? Do we still have that?
And I think what you're referring to also, Shane, is having some tail coverage
Right.
on the D&O.
There's,
right.
Yeah.
There's dates on the policy. There's a prior and pending litigation.
Right.
Yeah.
Date is one. Some have retroactive date, but more formally, it's those prior and pending dates that are pretty common. I think it's the further you have it back in time,
Right.
the better.
Yeah, that's the biggest lapse you see is if you're switching policies and one's a claims made policy, right? And one's an occurrence policy.
Yeah.
And so there could be a gap in there. And if there is a gap, you're technically violating state law by not having insurance for that gap period. So, yeah.
So that's why we have tail coverage.
Yeah.
Tail coverage, yeah.
And the tail coverage applies to the prior policy.
Right.
So
Right.
they would have to purchase tail coverage on that prior policy.
Right.
So
Right.
I know they have it for 1 year, 2 years, 3 years. But I guess the idea is just to kind of measure their, how they feel that their risk is of, there being claims that maybe go back
Right.
that far.
Yeah. Especially on the D&O too, because if you have the same carrier, then you have that continuous coverage.
Right.
If you change carriers, then you have to pick up that tail coverage
Right.
to make sure that nothing ever happened before as a board
Additional.
member. Yeah.
Right. So you kind of keep in mind the cost of buying that tail coverage in addition to maybe the savings that you're getting on the new policy.
Right. And you have the statute of limitations on claims, right? Which is 2 years or 6 years, depending on the type of claim. So, you don't have to get 20 years of tail coverage.
Right. That'd be expensive.
Yeah.
If it's even available.
Yeah.
Yeah.
One thing I wanted to bring it back to, actually, I know you're familiar with the statutes. So there's different types of associations, I believe.
Mhm.
So there's condo associations which fall under Hawaiʻi Revised Statutes 514B, and then there's other statutes that maybe apply to other types of associations, or
Yeah, that's a really good question. And I actually cringed when I said in the beginning about when I mentioned the statute, because it's not entirely true. That only applies to condo associations. The other category is either community associations or homeowners associations. People will always refer to their association as the HOA, but that's not accurate. So a homeowners association is governed under 421J, and it is Hawaii Revised Statute 421J. And usually at presentations, I like to bring them both. 514B is like this thick, 421J is about 10 pages long. And 421J does not require insurance coverage for boards. I don't think it even requires GL coverage. And so it's a very different situation. The governing documents of those associations may. So the difference is a 514B association is a condominium. I own in a condominium that's 6 freestanding homes, but in a condo regime, all the owners own one lot, and within that, they all have the right to occupy smaller units within the single lot. In a homeowners association, you own your individual lot, but you have all come together. The developer came together and agreed that all these lots are subject to the homeowners association. So a homeowners association is going to own a lot less. In fact, most of the time they'll own nothing. They might own roads, some easements. Sometimes there's a pool, but because of that, there's less of a requirement for insurance unless it's in the governing documents. However, we still strongly advise it. And most homeowners associations are also still governed by the Hawaii nonprofit statute, which although doesn't require insurance in the nonprofit statute, it strongly encourages it and gives the board broad powers in getting coverage. So we encourage them to act the same as condo associations, but in fact, it's interesting you asked the question because that came up just last week. An owner was challenging the board for getting coverage, for saying you're spending too much money on insurance because it's not required for us. It's like, well,
interesting.
Yeah. Well, you always want coverage when you don't have it, right? That's when you need it.
It's when you need it, right? And there's a difference between having insurance and being covered.
Yes. Yes.
That is true.
Yes.
Have an insurance agent, but also have an attorney.
Yeah.
Yeah. I'm going to go through some lightning round questions
Cool.
for you. For new board members, what kind of advice would you give them as a new board member joins the board?
Ask questions of your attorney, your insurance agent, your property manager. Those are kind of the, holy trinity of advisors for the boards. And they're the ones that have seen everything. Sometimes your other board members, it's plain telephone game. Their information might not be the best. So go right to the source.
Yeah. And property managers are key. Tell us maybe a little bit about the best things that property managers should do as far as as far as it comes to the board and making sure that they're following the directions.
Yeah, the best thing I love when property managers do is they say, well, this is how it typically works, but you have to talk to your attorney or your agent on your exact policy.
Right.
And so I love it. I love it when property managers do that because they're very practical, right? They're on the ground, they're doing the work. So they give the advice, but they also say, hey, I'm not the expert.
Right.
I've just seen it done 1,000 times.
Yeah. I agree.
What do you like to do after a hard day to unwind?
If I have a bad case, a bad ruling, a long walk, I'll go for a 3-mile walk or something like that. If it's for fun, I'd like to get on the water with my kids, go fishing, stuff like that. Yeah.
A little family time.
Yeah.
Any other last minute advice you would give to the listeners out there, whether it be board members or property managers or just homeowners?
I can say this because I'm not the insurance guys, but spending more now is often the better option, especially if it's just a little bit more. You'd rather pay 20% more on your policy now and get twice as good coverage, especially goes down the line. I remember at a seminar, someone came up to me and said, you're an attorney in condos. Do condos really get sued that often? And she said, I've been on my board for, 10 years and we haven't had a lawsuit. I said, not only do I represent your board, but you guys have 2 pending lawsuits right now. She just wasn't aware of it. She wasn't the president. So condo lawsuits happen all the time. Every condo will have a lawsuit, within a 5-year period. So it might be a small one, or a mediation demand. It might be a small one, but your insurance will get triggered. It's just a matter of when. So get good coverage.
Yeah.
So part of that, just to recap everything, just understanding what the policies cover, what they don't cover.
Yeah.
Of course, consulting your attorney when you possibly do get a claim.
Yeah.
And inform the insurance agent, file the claim in a reasonable amount of time.
Yeah, exactly. Good pointers.
Oh, thank you.
Thank you guys
so much, Max.
Yeah, Max, thank you very much for the time. And I think our listeners out there will be very appreciative after they listen to what we had to say today.
Condo world is crazy, but we get through it together, right?
Yeah, that's right. Well, thank you all for listening. Again, this is Atlas Insurance's Risky Business, and I'm Sean Satterfield.
Max Kopper.
Shane Choi. Be sure to like the video, comment, give us your condo queries, and subscribe to Atlas on YouTube and follow us on the socials. Thank you so much for joining us today. Aloha.
Aloha.
Thanks, everyone.